is currently up 171 points. Certainly been a roller coaster ride, though, for stocks over the last week or so. So today we've got our financial advisor, Elaine Bedel, in studio. It's always great to have you here. So, Elaine, you know, our viewers watch this every day. One day it's up a couple of hundred, the next day it's down several hundred. What's going on?
Well, you know, I think what's happening is that we've got a lot of uncertainty in the market, and investors don't like that. We've gotten some bad news out of China that maybe their economy is starting to slow. It's still growing, but at a slower rate. And our own Federal Reserve has indicated originally that we're probably going to increase interest rates in September. That may now be on the back burner. So those kinds of things actually get investors nervous and concerned. But what investors need to ask is, has anything fundamentally changed? I mean, if there's been slowing in China, we're probably feeling that already. And remember that U.S. exports to China are about 7.7%. So it's not a big portion. There will be winners and losers. Apple, for example, you know, they may be selling fewer iPhones to China, so their stock has come down a bit from its high. So all those kinds of things will happen. But generally speaking, the U.S. economy is still strong. Our companies individually are still doing well. So don't panic. Keep the emotion out of this and really kind of sit back and relax a little bit. But people do remember what it felt like in 2007 and 2008.
So it sounds like your advice really is ignore the noise, hold on to the stocks, right?
Exactly. That short answer is yes. You know, the market has had what we call a correction, which is a drop of more than 10% but less than 20. Well, that's the first time we've had a correction in 4 years, since October 2011. So that's unusual in itself. This rally that we've had in the market for this last 4 years is the third longest rally in the S&P 500's history. So we were due for a correction. And so a correction usually happens every 2 years. So it can be healthy for the market to do that. So I think that's what we're seeing. So my advice really is stay where you are. If you're appropriately allocated, and you should be in the stock market and it's long-term money, just stay there. And you know, a good example of that is when we went down in 2007 and 2008, well, in 2009 as well. We lost over 50% in the market, but in 3 years we had returned. So if you can leave it there that long.
This long-term money that you're talking about, what do you mean by that?
Yeah, that's what I was talking about. We need that 5-year time period.
5 years,
so
okay.
Don't put it in the market unless it can stay there 5 years or longer. Again, because of the experience we had with the financial crisis, in 3 years we had recovered a 56% drop in the market.
What would the consequence be for investors who decide, I'm going to sell and sit on the sideline while all of this is playing out?
Well, and you know, some people will do that, but unfortunately that means probably they're selling at a low number, and then the question becomes, when do I get back in? And you know, the market moves as quickly up as it sometimes does down. So you could miss that one day of the market going up, and it's hard to get back in. And so what may happen is you end up buying high. You're better off just holding on from the bottom and let it go up by itself, as opposed to you getting out, losing money because you sold out, and then trying to get back in, and it's a higher price.
Stay calm and wait it out. Sounds like your advice.
Absolutely.
All right, Elaine Bedel with Bedel Financial. We have more of Bedel Financial on WTHR.com. You'll find it under Hot Topics.